Hey everyone, welcome back. I hope you guys are having a much better day today on Friday than the markets had or Bitcoin or the miners. It was a bad day. Let's just put it forward. It was a bad day. So we'll get into Bitcoin, obviously. We'll take a look at also what's possibly causing Bitcoin to go down it went up down 10% today. We'll take a look at some of the stories on that, and we'll also take a look at the miners, see how they did today. They didn't do good, but they didn't do as bad as I thought they were going to do with Bitcoin being down 10%. I thought the miners were going to be down 15, 20% down, but they weren't that bad. And then we'll also take a look at GPU miners like Hive, Hot 8. I think there's a couple, maybe more, that also have a little bit of GPU miners. And what can they do after, obviously, proof of stake goes live. It's supposed to go live like September 15th, 16th, somewhere around there. Ethereum is supposed to switch over. So we'll take a look at that a little bit. I don't have a lot of data on that, but we'll just take a look at it as well. And as always, you guys know the drill here. Not financial advice. I'm for entertainment only. Do your own research as always. I'm invested in coins and companies for full disclosure. And let's get into the market here really quick. And we'll get into Bitcoin and the miners, see how they did today. And then we'll get into, obviously, what's possibly causing Bitcoin to drop 10%. All right, so obviously S&P was down 1.29%. Dow Jones was obviously down 0.85%, and Nasdaq was down 2.01%. We know that Bitcoin is a risk on and a risk off asset. There's obviously some troubles going on in China. We'll take a look at a story about that a little bit. Maybe that's causing some worries. And I think maybe we got a little bit too greedy with Bitcoin here. So markets were down, obviously, for the most part, all across the board here. You can see it in China. They were down. It looks like maybe, was that Hang Seng? Is that Tokyo, I think? Might have been up a little bit. So let's take a look at Bitcoin here really quick. And as you can see, Bitcoin had a bad day today. It was not pretty. If you're dollar cost averaging, this is a good time possibly to get in, not financial advice. I've been waiting for a little bit of a pullback to buy a little bit more. I did not get any cash in today. Still waiting to pay off my property taxes for the end of the year here, which are due at the end of the month. So I'm consolidating or holding quite a bit of cash right now to pay that off. Once that's done, I'll be, pulling the trigger a little bit more here. But that's not going to be for at least another week or two. So I'm hoping prices stay a little bit low for at least that time period. But nonetheless, Bitcoin's at 21,000 roughly right now. In yesterday's video, I said we could possibly fall. I was hoping that we would only stop here at around 22,600. And I said possibly if that doesn't hold, we're going down to the 21,000 mark. And sure enough, we went down to 21,000 and below. So the RSI is looking pretty good. We bounced off of like the 32 mark here on the RSI on the daily, which is good. And the other part of it is, if we look back, going back here to July 12th, we were obviously much lower here on the price. We were at 19,287. So we're still up in price. So I think it's not too bad just yet. If we get a reversal on this and where we're seeing the RSI continuing to go flat and price goes down and we go below this mark, well, then we have a trend reversal and then we're looking a little bit bearish on the daily chart. On the 1 hour chart, we're also looking, we're waiting for a reversal on the bearish part of it. I said yesterday Bitcoin was looking bearish on the 1 hour chart, and it obviously turned out that way. We did obviously go way below here on the RSI to, let's see if I can move this over a little bit so I can get the data on it. We went down to as low as like 11 on the RSI, which is way oversold, obviously. We're still way oversold right now, but we are starting to bounce back up a little bit, and we'll see if we have a little bit of a correction here. So this could have been just a correction that we had. Obviously, we've got a price of Bitcoin for quite a few weeks here. We've been going up, so this might be just a pullback, but there's obviously other concerns here that are, worldwide that might be having an impact on it as well. So right now, it is looking a little bit bearish on the 1 hour chart still. I would say actually bullish because we are so low on the RSI. Unless the RSI continues going flat and price continues to go down, which we won't know until possibly tomorrow, but we'll see how that happens. So on the daily, we're still looking okay. On the 1 hour, we're kind of in a guessing game right now. Ethereum is at 1,619. Oh, and Bitcoin did fall. Let's go to the daily chart. It was down today 10.15%. So pretty significant drop. We do have these from time to time, and then we're usually okay after it, but we'll see. Ethereum's at 1,619. It dropped today 12.85% on the day. Pretty big drop as well. It has been going pretty much on the RSI has been going flat sideways while the price has been going way up. So this is kind of nice to have a little bit of a pullback. And last time we were right around here on the RSI, we were back right around here, which was at a price of 1130. So obviously still a huge price appreciation from that period on the RSI. So I think we're looking okay. All right, so that was Bitcoin and Ethereum. Let's take a look at the miners here. ANY was down only 5.43%. It's 3D basically to 70 cents. So it obviously did better than Bitcoin and Ethereum. Argo was down 12.5%. 12.5% today to 49 cents. It's been a long day. I'm recording this. It's like almost 9 o'clock. Let me see. Bit Digital was down 10.34, so kind of in line with Bitcoin to $1.56. Bitfarms was down 12.79%, it looks like, to $1.50. CleanSpark was down 10.6% to $4.64. Cores was down 14% to $2.50. DigiHost was down 10.12, I think. Let's see if we can get this to show up here a little bit better. 17, there we go. So $2.06. DMG was down 6.86% to 25 cents. Oh, why did I do that? DMG is down to that. And why is it not sliding down on me? DMG Green was down to 7.03% to $3.04. Hive was down 15.8%, so a pretty big drop there to $5.32. We've obviously seen also a pretty huge increase in Hive over the last couple of days and weeks, and it's still much higher than where it was. So most of the stocks are that way. Hut 8 was down 13.75% to $2.32. Iris Energy was down 11.87% to $5.05. Luxfolio was down 9.65% to 8 cents. Marathon was down 15.46% to $13.18. We do have some gaps here that I think are going to get filled on a lot of these miners. When they started going this morning, they were down quite a bit. Mawson was down 14.7% to 72 cents. Riot was down 12.44% to $7.25. Stronghold was down 12.16% to $1.95. And we know why Stronghold is down is because they're selling off returning all of their miners because of financial issues. So those are the miners. Obviously not a good day for the miners here, but not as bad as I thought it was going to be. Obviously with Bitcoin being down 10% on the day, I thought the miners were going to be down 20, 30% or something like that. But this is obviously not too bad. So we'll see how Monday plays out and what happens with Bitcoin over the weekend. We'll have to keep an eye on that one as well. All right, so let's take a look at a couple of stories here. I'm thinking that one of the reasons, it's not the only reason, but one of the reasons that Bitcoin obviously fell, markets fell today is there might be some worries with China. They're having a lot of issues right now in their economy. One of the issues is their housing. The other one is obviously with the pandemic. And things are not looking as good as they possibly could be. So China surprise data could spell recession for them and possibly for the rest of the world as well. And here is just a couple of things that I want to point out. So China shakes the world or not. Against all expectations, not a single economist polled by Bloomberg had predicted it. The People's Bank of China has cut interest rates. The ease was only by 10 basis points to the bank's one-year lending rate, but it was still the exact opposite direction to the monetary route being taken in the West and in the rest of the emerging markets. Right, we're raising interest rates here to slow down inflation. And the PBOC would absurdly not have done this unless it felt compelled, which implies that the central bankers believe the Chinese economy is in worse state than it appears. So this was from August 15th, a couple of days ago, and we're hearing a lot more on it. And there was something else. Here we go. So what's wrong with the Chinese numbers? The team at Gavacal Dragonomics offer this handy list. So industrial value added eased to 3.8% year-over-year growth in July from 3.9% in June. Exports in renminbi, terms picked up to a 24% gain from 22. Fixed asset investments slowed to a 3.5 rise from 5.8. Retail sales weakened to 2.7% growth from 3.1. Property sales contracted 29%. This is really big, deeper than the 18% fall in June. Right, there's a lot of problems with building building or housing market in China. A lot of Google it, YouTube it. You can find a lot of stories on it. I'm not going to go into details on that, but it's basically possibly a Ponzi scheme for the builders. People would put down payments for future buildings to be built, and they would start paying their mortgages on it basically before it was even built. So troubles is probably being brewed there. Construction starts declined 45%, unchanged from June, and private sector credit growth slowed to 8.6 from 8.9. So obviously the decline, 45% in construction starts, is obviously a big thing. Then you also have the banks. There's issues with the banks in China as well, and they're basically freezing people's accounts and not letting people pull their money out, and you got protests going on. So you can Google all that, YouTube it, you'll find all the details you need on it. And one of the things I wanted to do is see if we can maybe see if there's a trend that has been increasing on it. So let's go to trends.google. Oh, there we go. So I wanted to check for China. Let's see. We have obviously seen a little bit of a spike here in China on the news, China, and let's make it China housing market. Yep, see that huge increase there in searches on that? So it's obviously on people's minds here. There's definitely a huge increase in that. So that's one of the wonderful things of Google Trends is you can search for things that might have obviously an impact on economies and everything else, and you can definitely see if there's a lot of people also searching for it. Let's see what's if we can check for maybe like China market collapse. That's kind of up and down here. But the big takeaway from this is there's obviously some trouble in China that's going to spill over to the rest of the world, which is not good and something to keep an eye on. Here's Cointelegraph with 3 reasons why Bitcoin's dropped to 21K and the market-wide sell-off could be worse than you think. Hopefully it's not worse than we think. Hopefully it's just a correction that we're in right now. That would be nice. But here's some of the things that they point out. So regulatory uncertainty increased on August 17th after the United States House Committee on Energy and Commerce announced that they were deeply concerned that proof-of-work mining could increase demand for fossil fuels. As a result, U.S. lawmakers requested the crypto mining companies to provide information on energy consumption and average costs. And I think most of the miners that we cover here use, well, I wouldn't say they all do it, but some use obviously natural gas, some use nuclear, some use hydro, some use wind, solar. So it's a pretty mixed bag on it. And I think a lot of companies are shying away from using like coal or anything like that. So I'm hoping that's going to be just some FUD here and that's going to go away. Some analysts might suggest that harsh daily corrections like this one seen today is a norm rather than an exception, considering the asset's 67% annualized volatility, which case in point today's intraday drop in the market capitalization exceeded 9% in 19 days over the past 365 days, but some aggravants are causing this current correction to stand out. So BTC futures premium vanished. The fixed month futures contracts usually trade at a slight premium to regular spot markets because sellers demand more money to withhold settlement for longer, technically known as contango. This situation is not exclusive to crypto assets. In healthy markets, futures should trade at 4 to 8% annualized premium, which is enough to compensate for the risk plus the cost of capital. So it seems like that is falling a little bit here, and we don't have that as much as we did before. So you can see here it's fallen here in August, which might be one of the reasons that it's causing Bitcoin to fall here. And according to the OKX and Deribit Bitcoin futures premium, the 9.7 negative swing on BTC caused investors to eliminate any optimism using derivatives instruments. When the indicator flips to the negative area, trading in backwardation, it typically means there is much higher demand for leverage shorts who are betting on further downside. So we have possibly that going on. And we've just obviously went up quite a bit here in Bitcoin price in the last couple of weeks, which might be the case for this. And then we have leverage buyers and liquidation exceeds 470 million. So futures contracts are relatively low cost and easy instruments that allow the use of leverage. The danger of using them lies in liquidation, meaning the investor's margin deposit becomes insufficient to cover their positions. In these cases, the exchange's automatic deleveraging mechanism kicks in and sells the crypto used as collateral to reduce the exposure, and you get basically a snowball effect. So we saw this back on June 12th. We had huge longs, and they got liquidated, and we're seeing the same thing possibly here basically today, and those are getting liquidated. So a trader might increase their gains by 10x using leverage, but if the asset drops 9% from their entry point, the position is terminated. The derivatives exchange will proceed to sell the collateral, creating a negative loop known as cascading liquidation. As depicted above, the August 19th sell-off presented the highest number of buyers being forced into selling since June 12th. So we got a little greedy here. And margin traders were excessively bullish and destroyed. So crypto traders are known for being bullish, which is understandable considering the adoption of potential and fast-growing use cases like decentralized finance and the perception that certain cryptocurrencies provide protection against USD inflation. A margin lending rate of 17x higher favors stablecoins in not normal and indicates excessive confidence from leverage buyers. This is why I don't use leverage. I just buy into it because days like this are going to get you wrecked. So these three derivatives metrics show traders were definitely not expecting the entire crypto market to correct as sharply as today, nor for the total market capitalization to retest the 1 trillion support. This renewed loss of confidence might cause bulls to further reduce their leverage positions and possibly trigger new lows in the coming weeks. And I hope that is not the case. I hope it's just one of those corrections that we have, like one of those healthy corrections where we've just gone up too high, too fast a little bit, and we need to pull back a little bit and kind of reset things a little bit to finally continue going back up a little bit. But we'll see. The weekend is obviously going to be interesting to see what happens with Bitcoin, Ethereum, and then that will dictate obviously what happens with the miners on Monday and going to next week. All right. So one final thing I wanted to take a look at was, the miners are the ones that have GPU miners are going to have to possibly, if everything goes well, for Ethereum in September, they're going to be going to proof of stake. So that's going to leave, I know for sure, Hut, Hive as well. And there might be one or two other miners as well that have GPU mining, but not into the extent that Hut and Hive has. So there's going to be obviously a big decrease in revenue for those two companies, Hive and Hut for sure, Hut 8. And I wanted to kind of take a look at to see what their potential is right now as far as what they're making on Ethereum with GPUs and what are their options going forward once proof of stake gets switched on. So looking at What2Mine website, I just put in some basic information here. I put in, they have one miner has 6 of the 3080 cards installed in one basically computer miner. And their cost is about 5 cents right now. So on Ethereum, you're basically making about $12.71 a day on that miner alone, after power costs have eaten up from $14.44 here. And looking at some of the other coins that they could possibly mine as well, we can see here that difficulty is basically 852 terahashes on Ethereum. And then if we go down here to some of the other coins, you can see that some of these other coins are still pretty profitable at $9.51, like Conflux, but they only have 745 gigahashes. If you get all these miners from here going into like this coin and this coin, it's going to drive the difficulty way up and decrease the revenue here. So it's a kind of tricky situation that they have, and it's going to be a lot of chaos when that happens for the miners, the guys that are also doing it from their houses, small mom and pop shops that are doing it. They're going to be all trying to figure out where is the best place to do it, with which coin that still has proof of work that they can obviously mine and generate income that way. Some have said that they're going to be going over to NiceHash, which will then, and whatever they set that to, will pay out in Bitcoin. So that's one other option there. And obviously for Hut 8 and Hive, they have a little bit more capital. They can probably do other things with it that we'll also get into here in a minute. But looking at just at these miners here, even if we look at, I'm trying to find where Ethereum Classic. So Ethereum Classic is $5.98 right now, and it's at 42 terahash right now. So about 42, and that's 20x higher here. So if you add those miners into Ethereum Classic, you're definitely going to have some price, revenue declines as the difficulty goes up, obviously, and everybody's jumping ship to this one. So there's still obviously a lot of coins that you can get into. Which ones are going to make it or not, I'm not sure. Obviously, like Ethereum and Bitcoin the most. Those are the two that always stand out to me. The other ones are, just projects. I don't know enough about them to talk about them. So it's going to be really difficult for the miners, I think, to figure this out. The other options they have is obviously doing something like Amazon AWS that they have. So Amazon has AWS, which is their basically on-demand servers that you can basically rent out as needed or deploy as needed. And they also have an instance of it called EC2 4G instances. So this is the industry's most cost-effective GPU instances for machine learning and inference and graphics-intensive applications. And I was trying to figure out how much are they making on the GPUs for somebody wants to do it. So it goes into here. Where was it? Here it is. Amazon EC2 G4 instances are the industry's most cost-effective and versatile GPU instances for deploying machine learning models such as image classification, object detection, and speech recognition, and for graphic-intensive applications such as remote graphics, workstation, game streaming, and graphics rendering. G4 instances are available with the choice of NVIDIA GPUs and AMD GPUs. So you can also do this for AI, obviously, and other applications as well. But trying to see what could they actually make if they switched over to something like this. The other thing that's kind of going to be tough for them is the miners that they have right now are not in data centers that are, how would you say this? They're not in data centers built for security and encryption and everything else that goes in with having applications run on those instances or anything like that. The miners, I'm talking about the miners, not AWS. AWS has some of the world-class data centers. And those are all temperature cooled, temperature monitored, everything is set to a certain amount. It's always going to be dry in there. It's not going to be humid in there. So some of these places that the miners actually are powering these can get a little bit humid. It can get obviously cold as well. So they're always trying to monitor that. But the biggest thing is obviously humidity, and dust is another thing because they have obviously other working parts. They have also hard drives, other things, CPUs, a lot of CPUs on some of these machines. And the miners that they build, like Hut 8 and Hive, at least from what I've seen here, is they're pretty generic, just a motherboard, a generic CPU, just enough to handle the graphics cards on the motherboard. But I don't know how well that's going to translate, obviously, into like data center applications. And I believe Hut 8 has some data center class or data center machines that were built by Dell, I believe, with GPUs in them. So those could be transitioned over to the data centers that Hut 8 has. Hive, I think, is going to be in a tougher boat with that. So I'm trying to figure out what Hive can obviously do with these. But looking at the pricing here, we'll take a look at it here really quick. So product details, we're looking at, you got like G4ND large, extra large, which has one GPU, goes for like the on-demand pricing. You're at 52 cents an hour, basically. And then if you get into some of the larger ones with like 8 graphics cards in them, and these are virtual GPUs, maybe not GPUs, these are virtual CPUs, but maybe these are just actual GPUs. At 8, you're looking at $7.84. So about 75% less than what they could possibly mine with them right now. And that's if they're the 3080 graphics cards. I'm not sure what Amazon is using right now, but it's going to be hard to do apples to apples. That's why it's going to be a difficult progress. I'm drawing a blank here. it's going to be a difficult transition is what I'm trying to say, especially for Hive, I think. And, they're talking about high compute and everything else, which is fine. They can obviously make money off of it, but it's not going to be the same as making the money off of mining Ethereum. They could get away with mining, some other coins, doing part of it as well for creating a data center for these GPUs or something like that. But that's going to also cost money. They have to obviously update, I think, possibly their motherboards, add on CPUs onto it as well. Then you got to do the software stack on top of it. So it's not going to be a quick turnaround, I don't think. I could be proved wrong on that, but I think just from everything that I know what's going on, I think it's going to be a couple months to half a year, maybe transition for that to work out properly. It's not going to be an easy feat to do that. And then let me see here. Yeah, so it looks like the most powerful you can get here is 8 GPUs on that. So $7.84 or 82 cents on on-demand pricing. If you have 1 year reserved instance, effectively hourly, you can get it at almost half of that. So, and we know that you can use it for obviously AI. You can do it for rendering, movie creation. You can do it for other studies, other mathematical equations, modeling, things like that. So there's obviously opportunities to do it there, but the revenue is going to be less than what we were used to on that. And that's why we've seen, I think, Hive build out their Bitcoin mining, and they purchased the ASIC miners as well from Intel, is because they knew this was going to happen. They didn't think it was going to happen possibly this quickly. We've heard Frank talking about it in the past couple of weeks and months, in fact, that, he still doesn't believe that it's going to happen in September. I'm not for sure it's going to happen in September yet. Everything's pointing to that, but we may have a little bit of a delay. If it gets delayed, it's going to get delayed by a couple months, but I don't think it's going to get delayed by a couple of years. So, yeah, I just wanted to point that out to you guys here, that it's going to be pretty interesting, especially when we get into September, as far as what those miners, Hut 8 and Hive, can actually do with their GPUs. I don't know if it's going to be a better... They know what they're doing, but they have to obviously figure out if it makes more sense to just sell those GPUs and install miners, ASIC miners in there, or if they can actually pull off doing this kind of thing like Amazon's doing here. Google's doing the same thing. You got Microsoft, and those are the 3 big names in this space that are doing these types of things, and don't know how much they can break into this kind of space, being a previous miner of Ethereum. So those are obviously the implications that we have with this. We'll have to see how this plays out, and it's going to take a while. Like I said, at least September's going to be crazy, but it's going to take a while for them to get this all figured out. And based on that, I think possibly Q4, basically October, November, December, are going to be really interesting for the miners, Hut 8 and Hive, and some of the other ones that have a little bit of the GPU miners, while they figure everything out. And then maybe finally into Q1 of 2023, we'll get some more data as far as what they're actually earning on those, or what their final allocation was to mining and to high compute platforms. So that's it. Let me know what you guys think of all this down in the comments below. Let me know if you have other thoughts on it. Am I missing something else? Or anything else like that. Reasons for Bitcoin dropping, obviously. Let me know if you have other reasons for that as well. But yeah, that's it. I hope you guys have a great weekend. We'll probably cover the miners tomorrow versus Bitcoin. I'm interested to see actually if the miners were still up compared. Obviously, they had a pretty bad day today. But did they finish up on the week, or were they down? We've had a couple of weeks here where we've been going up and green, so wouldn't be surprised if we have one red week here before we continue going up further. I'm hoping. Fingers crossed. Okay, that's it. I'm rambling. If you guys enjoyed the video, hit the like button, subscribe. Helps me out tremendously. That's all I ask from you guys. And like I said, hope you guys have a great weekend. I'll see you guys probably tomorrow. If not, Sunday, we'll do the video on it. And then also I'm working on another miner to add into our list that was requested. Hopefully they'll have that all finished up this weekend, and I'll have a video out maybe over the weekend, if not Monday. So thank you so much. Have a wonderful weekend. I'll see you then.